Welcome, everyone. I'm Pierre Leveille, President and CEO of Afri-Can Marine. I will run you through a quick presentation. So for the ones that do not know Afri-Can Marine, you will get a pretty good idea of what we're doing and who we are. So we can start with the we're an advanced exploration company developing large deposits of high gem quality off the coast of Namibia. Namibia is along the Atlantic coast just north of South Africa. So we're capitalizing on our vast experience in Namibia to develop high-quality resources. Our main focus is marine diamonds. Our main focus at the moment is the exploration license called EPL 3403, which is adjacent to Atlantic 1. It's the largest marine diamond deposit in the world, operated by De Beers Marine in joint venture with the government of Namibia. The joint venture name is NAMDEB. We've carried out some sampling in 2001 on that specific concession, and it shows comparable diamond quality and diamond size than on the adjacent Atlantic 1. Atlantic 1 hosts a resource of over 100 million carats. Of 95% of that is pure gem quality, so it's the highest quality that you can find in any diamond deposits. Also, it has produced last year near 1 million carats, and this year the forecast for production will be around 1.2 million carats. So we're just adjacent to that, and we seem to be on the same geological structures. Through our partnership with a company called International Mining and Dredging Holding Limited, we call that IMDH, we have access to the best-known marine sampling and mining technologies. One of their production vessel that is in place for us to be used at a later stage was producing with De Beers for 6 years, and at that time it has doubled the production vis-a-vis 5 other vessels. So shows you the high efficiency of their systems. We also own a significant interest in copper play in Namibia, which is called Hybe Copper. We hold an interest of 15%. Our Namibian partner Deep South holds an interest of 15% also, and Tech Corporation owns 70%. It contains the in situ historical resource on it is about 4 billion pounds in the ground. So it gives us about 2 pounds per share. 2 pounds per share. We say pre-consolidation here, sorry, because we had a consolidation recently, so it's 8 pounds per share. So our interest in Hybe is to be vended into a new co that will be listed, and the shares of that that company will be dividend out to our shareholders, and we estimate the value that will be dividend out to our shareholders at about $10 million. We are in Namibia since 1997. Namibia is a highly, well regarded as one of the best country or jurisdiction in Africa. And since then, since 1997, we have created a vast network, which is probably the most important key in our business development in a country like this. We're going to the next slide, overview. I've talked about EPL 3403. We have at the moment, we own 20%. We have the option to earn the remaining 80%. At the moment that we will complete the next sampling program that has been funded recently, it will be we will own 100% of the EPL. Previous exploration, as I said previously, we've discovered 3 diamond deposits with gem quality stones that are the same average size than Atlantic 1 at about 0.50 carat per stone. Geological survey has been completed to be followed up by a sampling program that will start in the coming 1 or 2 months. We don't have a date yet because we've just completed the financing, and we're starting now discussions with with the owner of the vessel, with IMDH, to establish the schedule. So that we will know soon, but the vessel will be available for us during the next 1 or 2 months at the latest. For the high copper, I explained that Afri-Can and Deep South has 30% of that. I said that the historical resource that were drilled by Rio Tinto in the 1970s shows a between 3 and 5 billion pounds of copper in situ, depending of the cutoff. Tech exploration objectives are to increase the size and the high-grade section of the deposit, because at the moment with a 0.46% copper, it's just marginal. It's not. It's barely economic. But it does not need a lot to be in economic territories. So if we can make the average at about 0.55% with new technologies and the type of deposit that we have there, then we can consider it will become a mining project, and we're quite near from that. Let's go to the next slide. So I've told you about Namibia. It's stable democracy. It's sparsely populated. There's about 2 inhabitants by square kilometers. So they have also excellent infrastructures, all inherited by the time that South Africa was for many, many years, between 1930 and 1990, it was a protectorate of South Africa. So they have inherited from their very strong infrastructure. It's well administered and transparent mining policies. And what is very important for us is that a large part of the mining code has been copied on the Canadian and Australian codes, which are considered as the best in the world, and also for us a lot better to manage with. So on that side, Namibia offers quite a lot. If anyone wants to go to the IMF website, the World Bank website, you will see that Namibia is always ranked number 2 or number 3 as the best country to do business in the African continent. So why diamonds? Oh, sorry for that. Let's go back for the why diamonds. Diamonds are probably the most intriguing and interesting resource or commodity to buy at the moment. The reason why is that the demand is always increasing, and even with the slowdown in the economy, we see always an increase in demand, a quite important increase in demand, and the production is lowering. The supply is not there. And the problem is for the supply that no new mine will come in production before many, many years. We think about 10 to 15 years, because no new large projects have been discovered that will come and be online soon to balance out the demand and supply factor. So because of that, it's probably one of the best resource business to be in at the moment. As you can see on that little chart, that's a chart from RBC Capital Markets in London. You can see the gap in between the shortage of between supply and demand, and you can see that it's only going to increase. And what we see also at the moment is that the demand from China and India has grown at a pace of about 30% per annum, and even with a slowdown in their country, it still remains the same. It's very robust. Now, why Namibian marine diamonds? Sorry for that. I'll go back again. Geologists estimate that the Namibia total offshore potential is in excess of 2 billion carats. At the moment, we are only 4 companies involved in that area. There's, of course, De Beers with their joint venture. There's IMDH. There's Afri-Can Marine, and there's a private company called Samicor. So it's a huge potential for a small number of players at the moment. Also, it contains the highest gem quality in the world at 95% of the deposit. Just as an example, you have the mines in Canada, the large mine, the Diavix and the others. Generally, in their kimberlite pipe have about 40% gem qualities. So you can see that the average there is way higher. And one of the reasons for that is the diamonds are coming from interland kimberlite pipes in the center of South Africa that have eroded. The top of the pipe have eroded for about 1 kilometer thick, about 65 million years ago. And through a high energy system, the diamonds were carried out to the sea in rivers and streams. But only the most perfect stones were able to make all that long journey in the high energy systems. Then arriving at the sea, they have been packed in different traps and huge embayments. So that's where we go to find the potential diamond trap sites. The average, Namibia is also the average highest rough diamond price in the world. Last year it was at $440 per carat. And also more than 50% of the production today is derived from the sea. So it's a business that develops quite well. The first commercial production that started in 1991, that was Atlantic One with De Beers. And what you can see here is that their growth in production since these years. I point out on the fact that in 2004, De Beers has rented from IMDH the vessel called Yetoivo, which is a production vessel. And what you can see there between 2004 and 2005, at the moment that it enters there, it enters in production, the production of De Beers has doubled. And before the deployment of the Yetoivo, they were having 5 vessels in production. So it shows the efficiency of their systems. And even today, De Beers are renting or chartering. They have chartered the Explorer, which is a dedicated sampling vessel specifically for exploration. And they have a 4-year contract with IMDH for that vessel. That's the vessel we will use for the next sampling also. So it shows the efficiency of their system, and it's a great partnership for us. Now, what you can see there is the area where you can see that Orange River makes the border between South Africa and Namibia, but Orange River was also the main conduit for diamonds in the sea. The big block ML47 is Atlantic One, where they're producing about 1 million carats per year. You can see EPL 3403 that is just neighboring that. There's also a very small strip, blue strip, that goes up to Ludritz, where they're producing quite a lot of diamonds also. Since 1932, on the beaches from the Orange River to Ludritz, De Beers have mined over 250 million carats. So what you can see in that area is that 250 million carats and plus on land, 100 million carats in EPL, in ML47. On the small blue strip also, there's about 68 million carats. So EPL 3403 is right in the middle of that gigantic diamond deposit. So we can say that it's extremely well situated, geographically speaking. Now, the EPL 3403, as I said, we own 20%. We're going up to 80%, to 100% after the next sampling program. We will issue for that 13 million shares in total for the 100%. So IMDH will become quite large owner of Afri-Can Marine. So it will also, it's a key element for us because they will become a stronger partner. I said before is that we have found three deposits that are containing an average size of 0.50 carat per stone, which is in that case, and we are in economic territories, and we can see that the largest stone were 2.69 carat, 1.76 carat, so very nice large stone also. So far we have recovered 117 stones, so which is quite enough to develop the first deposits. Now we will focus more on the area there. What you can see in EPL 3403 is that the deposits have been found in the really southern edge of the concession just neighboring mining lease 47, which is Atlantic One. And you can see that these deposits are covering a very small part of the overall concession. So there remains a huge potential also all along the in the rest of the concession. But for now, we focus on these deposits that we have discovered. If we look at that in a more focused in the area, what you can see there is that you see the area 1, 2, 3, which are deposits that we have delineated so far, and there's an area delineated for further development. In area 1, you can see that we found quite a lot of diamonds grouped together in the same area. So there we know that we have an economic deposit that will be bring to a trial mining in 2013. So the next sampling program will serve to start delineating resource in area 1 and area 2. And the first 200,000 carats that we were convinced that we will delineate in the area 1 will be lined out for a trial mining starting in 2013 with the other vessel, the Yatoivo. The trial mining should generate 200,000 carats. We recognize that we can mine that in about 8 months. So that would generate at $450 per carat about $90 million of revenues. We estimate the profits of the operation at about 25 to 30 million US. What makes Afri-Can quite unique also is that to go to production, we don't have any capex because we're renting vessels with the operational teams on board. So the only manpower we have to provide is our own geologist and mining team and the security on board. That's it. So we don't have to invest into buying vessels. We rent the vessels on a daily basis. What you find here is just to give you an idea of how we first look at areas and how we decide where we will go and sample. I've chosen that specific map because you can see that it's partially EPL 3403 and partially the neighboring concession owned by IMDH. The reason why I choose it is because you can see the texture of the seabed very well with that map. It's quite dramatic. So what we do first, we will cover the area with a large survey where we will use the data there to create these maps. So it enables us to see the seabed very clearly and decide where we will go and sample. And you can see that there's some craters over there. You can see that there's, like huge shapes that are like circular, like smaller craters. You can see big embayments. You can see also ripples in the bedrock. So that these are all prospective area for diamonds. So that's what we need first to go and sample. In that, we can zoom very tight, and we can have a very tight picture of the seafloor. So then we know exactly where we sample every time we sample, and we have a perfect picture of what we're doing. So technology has evolved quite a lot in the past 10 years, and now today it's very, very, very efficient. Jumping to the next slide, if it comes. So that's what I said. We have completed a survey in May 2012. Sorry. The results of the survey are used to plan the next sampling program. These results are not extremely exciting for investors because basically what will be exciting is the map that will come out from that survey instead of highly technical explanations. And then from that point, we are starting the sampling program. And after the sampling program, we will prepare the trial mining to be conducted, hopefully during first quarter of 2013. Let's go to the next slide. Now, you've seen on the map that we have a block more north of Loudres called Block J. We still have that. The situation with that block is temporarily it's in care and maintenance because we want to focus on EPL 3403. We found deposits in Block J, and we found a resource in Block J, and we have a potential to increase the size of that resource quite importantly. But the problem was that the size of the stones was about 0.12 carat per 0.12 carat per stone, which is a little bit small to make it economic. As you can see in the EPL 3403, we talk about 4 times bigger. We talk about 0.50 carats per stone. On that, we can have a sale price of $450 per carat. On 0.12, the sale price will probably turn around $180 per carat. The production cost running around $200. You can see that it's a little bit, it's barely marginal, barely economic. But the situation is that we know that in that area there was mining in the past that shown 0.30 and a little bit over 0.30 carat per stone, which would make it quite interesting. Will bring it back in a quite interesting economic sector. But so far we will have to do more job on it. So we prefer to complete what we have to do with EPL 3403, start the trial mining on it, generate cash flow from that, and then we will revisit Block J at a later stage. Now, just to go over quickly on the Hyde Copper project. As I said before, it's about 4 billion pounds of copper in the ground. The grade is about at 0.40 to 0.46%. It's a little bit marginal at the moment. But since 2009, Teck has started to do quite a lot of work, and their main approach to that was if they can find areas with higher grade and that they have enough tonnage in them to increase the overall grade to about 0.55, then it would be turned into a development and mining project. So what we can see here is some results from some drill holes that they had before. What is quite interesting is that the grades are higher than what they were before, and also they have found 7 other alteration zones that were never drilled. And in these zones, there was a lot of veins identified that are called early dark micaceous veins, EDM, which are having grade near surface way over 0.50%. So now the current program is to continue to drill in the main body just to test correctly these zones where we have found higher grade zones, and also to start testing really these 7 newly identified alterations. The other thing also that has happened in the first drilling program is that Rio Tinto has discovered these 4 billion pounds from the ground to about 350 meters deep. Teck has gone down to 864 meters deep, and it was highly mineralized going down all the way. And there was a lot of higher grade patches at around 400 meters to 500 meters deep. So from that point also, they know that they can increase the tonnage substantially. So it could turn out to be a very large project. At the moment, the people at Teck are stating that on pure exploration project, it is their flagship copper exploration project in the world. So they put a lot of effort onto that. They are the one that have requested or suggested that we list our interest of 30%, and the main reason for that is that in Namibia today, it's very important to have a local partner. There's not a strict law like in South Africa where you need to have a black empowerment group with you, but the political side have made it very clear to all mining companies that if they don't have local partners, at some point in time they would be forced to pass a law. So since then, instead of looking for a new bill, the companies have decided to adjust themselves and have the very good local partners. And the Teck have realized that our partner in Namibia, Deep South, are extremely strong local partners, very, very efficient people, well-known people in the community, very efficient people in on many fronts, and not difficult people. They're very good business partners. So they've decided that it would be great if they can help Deep South to be listed and increase their visibility in the Namibian front, and also get, try to help them having the sufficient fund to carry on with the project. So the listing to come in that specific company is highly supported by Teck, and when the press releases will start flowing about that, you will see that the tech presence will be shown quite a lot of time. So that's it for this project. Now, one key point with that is that we had to carry out or produce 43-101 reports for the Hybe copper projects and the Zebra Fontaine project, which is an option that we have on a zinc project very nearby Hybe that sits just between two producing zinc mines. So 42-101s have been proposed to or presented to the stock exchange, and also the stock exchange was requesting an independent evaluation of the Hybe project. That has also been completed and is under revision with the stock exchange. We should get their approval pretty soon for the three reports, and that's the key. When we have the approval from these reports, then we can start procedures for the listing. So that should happen within the next month. So that's the investment summary that we've seen at the beginning. Just to go a little bit further, the next slide, you will see that recently we have completed the financing, and we have at the moment $2 million in cash in hand, 80 million shares, 2 million shares in issued. Insiders are there for about 20%, and the institution for about 30%. I'm trying now to just bring you to the, there's a couple of, that's the people involved with us. I'm involved in that industry since 24 years, and I'm dealing in Africa, and mainly South Africa and Namibia since 1996. I've raised funds for a lot of projects in that area. Peter Lujan, the managing director of IMDH, who will sit on our board, and that will be done by the end of the year, is the managing director of IMDH. He has designed and operated the best-known marine sampling and mining technology. Richard Foster, our chief geologist, has worked for De Beers Marine for 32 years. He was instrumental to the discovery of Atlantic 1 with his team. So you can see that technically speaking, we have a very good, knowledgeable people. Now, the that I can go probably very quick on that. It's mining conceptual, economic. Current average diamond value in Namibia is $440 per carat. Even with the slowdown in the economy, if we use the Yatoivo on production, we will be able to mine a capacity. The vessel has a capacity to mine 240,000 carats per year. So at a cost of about $125,000 per day, then it will make diamond value of $440. Diamond royalties, direct contracted mining cost will leave an operating profit of about $183 per carat, which is very, very highly profitable. De Beers are stating that Atlantic 1 is the second most profitable project in the world. So you can see that, and for us it's very important also, I come back on that there's no CapEx for us to access that production. Now, the marine sampling technology, in fact, it's the same technology than at mining. It's just that it's on a reduced scale to permit the system to go slower, enables the geologists to see very well what they're doing. Just to give you an idea, this one, the production plan on the back of the vessel, it's the gray structure that you see there with a blue structure just on behind it. The blue structure is the sorting house. That plant is 20 tons per hour. That's the treatment it does. On a mining vessel, you will have 200 tons per hour. So what happens when you do exploration with 200 tons per hour is that the material that comes on the first screen comes in as a slurry. It goes extremely quick, and you don't see anything. When you go slower with the 20 tons per hour, then you can see the material coming, and the geologists can decide if they're still in good territories, if the drill has finished its penetration. They can see a lot of information from the first screen. So that's why it's very important to do that on a reduced scale. So That vessel is designed to take, today it's taking over 30 samples per day. It was designed for 21 samples per day, but since it's in operation since 2 years now, the efficiency has improved. The team has improved its efficiency. They also improved a little bit the functioning of the system, so it's quite efficient today. Now, what is very important is the scale at which we operate. A long time ago, even early in the 90s, in the year 2000, there was companies using what we call airlift system without any head. So it was like a vacuum hose that was just sweeping the seafloor and pumping the material it was able to pump. As opposed to what we use today, you can see that that's the sampling head. So the pumping vacuum hose goes on top of that and goes right in the center of it. And that's what we deploy on the seafloor. It goes on the seafloor. It weighs 170 tons. To give you an idea of the scale, right in the middle you can see a man standing there. So it's a huge machine, very heavy. So it can put a lot of pressure. It can also break, drill the material, and it makes it a lot more efficient because we can go completely to the bottom of every deposit, down to bedrock, which was not the case with the previous technology. What you see on the left-hand side there is the inside of the cutting teeth inside of the sampler. So you can see that it can drill, it can cut, it can hammer, it can do a lot of things. On the right side, you will see a concrete block where we've made a test, and within 10 minutes, it's just on the quay side before the vessel. Within 10 minutes, this is what it did with it. So it showed at that time that it was very efficient, because in these deposits, sometimes you will have some partly cemented areas. So all the technology was not able to penetrate that. Today, it's not a problem anymore. You have a picture of the treatment plant, processing plant, and that's a picture of the sorting box that is used at exploration. It's a hands-free glove box. It means that you can manipulate, but you cannot get anything out of there. It's completely secured. So the sorters will get the diamonds out of the every samples and then put them back into these tins there, and these tins are sealed with a code bar on it, and they go under in a safe where you have two keys. One key is on board, and the other key is with the police of Namibia at the port of Lutritz. So when we come back, we cannot open the safe without the presence of the police. And from that point on, they control everything we do until we leave the country with the diamonds. So it's an added security that does not cost too much for us. And it shows also how important it is for Namibia. They're very serious about that business. Now, the next and last slide is a quick picture of the MV Yatoivo, which is a mining vessel ready for us to be used in 2013. You can see that it's quite larger than the Explorer, and the plant has been increased to 200,000 tons. And instead of using a sampling head like you've seen, what it does, it uses a crawler. So we deploy a crawler in the sea. It goes on the seafloor and pump the material wherever we need, and it's completely remote from the vessel. So the advantage of that is that we can clean out every area we're getting in. So that's about it for the presentation. If you have any questions, please feel free to ask.
Pierre, this is Jesse Feinberg. So thank you for the presentation, very informative. What I'm just going to ask everybody now is, if you do have a question, you should hopefully see a little a question box. You can either type a question in there or just type in a little question mark. I will see it, and then I will unmute you. So we actually have one right now, and let's get this going. Let me make sure I can. Help me out here for a second. Unmute. Oh, there we are. All right. So we're gonna unmute. I apologize. I'm going to mispronounce your name, but is it Torbjorn Anderson? Go ahead if you have a question, please. Are you there? He asked, how will you finance the trial mining, is what he asked, if he can't speak right now. So that's the question. How will you finance the trial mining?
Well, the same than we did in the past. Trial mining, to start the trial mining, will need about $3 to $4 million. And with the strong financial support that we have with our new partners in South Africa, we're not very nervous about that, because after the sampling programs, the results are what we think they are. Then we will have the financing in place to get started early 2013 with the trial mining. So it's going to be share issuance.
Okay, thank you, Pierre. Dave Sedko, if you I see you asked a question. If you have let's see if we can hear you. If you want to ask your question, if not, I'll just read it for you. Are you there, David Stipko? Well, he asked. He wanted to know, he's asking. Make sure I'm reading this right. Are there 3 publicly traded diamond companies, or are there publicly traded diamond companies? Are there 3? He's asking. Does that make sense to you?
If you mean the companies involved in the marine sector, we are the only one which is listed at the moment. There's the beers, if you want to have some information, are now owned by 85% of the beers is owned by Anglo Gold. So you just have to go to Anglo Gold website and you can find information under the beers menu, I suppose. And for IMDH, it's a completely private company, and the Samicor also is a private company. If you talk about the general diamond industry, then there's a quite interesting number of diamond companies, starting from Afri-Can gemstones and Petra diamonds. There's and many others, Namakwa. So there are all companies involved in that part of the world also, all in Africa. But they're not in the marine diamond sector. The only other marine companies that are not involved in diamonds are Nautilus Mineral, which is NUS listed on Toronto, and Diamond Field International, which is listed also in Toronto under DFI. Diamond Field was involved in marine diamonds up to about 4 years ago. But in 2008, they decided to walk away from that because they were not very successful. Their equipment was very old-fashioned equipment, not very profitable, and they would have to invest quite a lot of money to buy new equipment. So they decided now to focus with other companies in the Red Sea for discovering, they're exploring for base metal, I think. Their projects are there. They still own their mining leases, and that's something that we're looking at the moment.
Okay, thank you. While others, again, you can type questions right into the question box, or there should be a little raise your hand button, so you can type those in or just type a question mark. I'll make sure to unmute you. While we give people a moment to ask questions, I guess I was just making sure I understood the timeline properly. I know you said you're undergoing or about to get going on your sampling program, and I guess if that goes well, then you said you'd begin preliminary mining in first quarter of 2013. Was that right? And then what would be kind of the schedule from there if things go well to get up to like a full production?
Full production will be, trial mining and production will be the exact same stuff. The thing is that under the exploration license, we have the right to do bulk sampling and or trial mining, which is nearly the same. And in the marine industry, because we use the same vessel at trial mining than what we will use at mining, it's like mining. The only difference is that we cannot call it legally commercial mining. And if we have only 200,000 carats to start, when I say only, it's nice to start. But if you want to have a commercial mining operation, let's say for 10, 15 years, we will need a lot more than 200,000 carats. So the idea is to go in trial mining, use that cash to continue to explore and increase the resource. So while we are in trial mining, you will see that the other sampling vessel will go at sea time to time to continue sampling in the concession and increase the resource. And when we arrive over 1 million carats of a resource, then we file for a mining lease. And that's at that point when we get the mining lease that we are in commercial production. But in the meantime, it's going to be mining, but under the essence of a exploration license instead of a mining license.
Okay, thank you for explaining that. I do want to give people an opportunity to ask any questions they may have. So please just type in a question mark or type in your question in that question box. We'll sure to get to you. While we give people an opportunity for that, maybe I'll query another question. So obviously, what makes this project, one of the reasons initially it was likely attractive to you was the proximity to De Beers Marine was next door, and it's been, a very productive marine mine, next to your areas that you're prospecting in. Do you think down the line there'd be possibility for something like a joint venture or an acquisition, further down the line, or that's kind of too hard to, I can't really say right now at this point?
We are looking at acquiring more ground, if you can say it like this, because it's in the sea, but next to us there are EPL 3427 that seems to be on the same structure, so that's something that we have an option, a verbal option by IMDH that we will make a deal with them a little bit later. We're looking also in the Ludra area. There are some mining leases that could be available at the moment, so we're looking at that. Now, doing a joint venture or being taken over or anything like this with De Beers or Namdeb is not possible in Namibia, because a long time ago, Namdeb and De Beers were owning all the marine concessions, and but they were focusing solely on their land production and on their Atlantic One production. So in 1995, the Ministry of Mines have decided to force Namdeb and De Beers to relinquish some of their areas to permit the entry of new players and, get more development for the country. So from 1995 to 2006, the Namdeb and De Beers have relinquished, EPLs on a slow pace, and then we got involved in different EPLs, including EPL 3403, and but now from that point on, the Ministry of Mines and the government of Namibia are not interested to see De Beers and Namdeb increasing their business again in taking over others or making joint ventures with others. And one of the things that one must understand is that their 100 million carats project is a huge project, and they're focusing solely on that. They don't have any technical resource now that they can deploy to go on other concessions. So it makes that the rest of Namibia will suffer from lower development if De Beers and Namdeb are involved in two other projects. So, but there's other diamond companies that are showing interest in what we're doing at the moment. So it could happen that there would be joint venture or even takeovers from other diamond companies.
Okay, thank you, Pierre. I want to give people one last opportunity to ask questions, and then if we don't have any more, we'll conclude here. And what I would like to say is, well, first, thank you, Pierre, for taking the time for the presentation. But if anyone has any follow-up questions or would like to continue the conversation, I really encourage you to just reach out to me with an email or a phone call. I'll be happy to put you in touch with Pierre directly. I'll email you, but so you know my email, jfeinberg@rbmilestone.com, jfeinberg@rbmilestone.com. Very happy to put you in touch with Pierre. Oh, Pierre, it looks like we actually have one last question. Margus, are you available? Margus, are you available? Go ahead.
Can you hear me?
Yes.
Can you hear me? Okay. No, I just wanted to ask what the status of this Deep South listing is, or is it sort of in a concept stage, or what's the timing, expected timing, and you had some comment on the valuation. Maybe can you add a little detail on that?
It's not only a concept; it's something ongoing. There's a saying in the industry that when you want to go and list, you know when you start, you never know when you finish. Sometimes it could turn out to be quite long. And in that case, it took a long time to get these 43-101s and the valuation report on place. But now that's the biggest part. That has been completed. That's done. When we have the approval from the final approval from the stock exchange, then they will be published on CDAR and they will be on our website, so everybody will be able to see what has been accomplished there. So it's not a concept. It's really ongoing. Now, we were planning, hopefully, to do that before June 2012. But from March even to today, the market for exploration company was completely down. It was it's one of the most difficult markets we've seen in many, many years. So we have been slowed down by the stock exchange that took too long to analyze and ask questions and so on the 42-101. But in fact, it was not a bad news, because if we had made a listing, let's say in June, it would probably have been a disaster, because the interest was just not there. So now we see the interest coming back slowly with the brokerage companies. So that's something that we would like to reactivate with brokerage companies in September, hoping that the market will be a lot better in October and November, hopefully, and then we can achieve to have that listing and the dividend paid out done before early December. That's the goal for now, but it's always depending on when we get the final approval for the reports. And then we will raise money at the same time, and we need to have some market support also. So we have a part of that is quite clearly done, but we still need to add more on it if we want to have it to be a success. So this, one way or the other, will happen. It's just a question at this point in time that I gave you the timing that we hope that we will realize, but two conditions have to be met. First, the approval of the exchange, and the second approval, the second condition is market conditions. If they remain very difficult and awful, that can postpone a little bit the project. We just completed the financing in Afri-Can Marine, and I can tell you that we were ourselves quite surprised of succeeding that in that period of time, because if you look at the financing that have been done since March in the exploration industry, you will see that there is very, very little number of financing that have been accomplished. So that was a quite good accomplishment. So we hope to do the same with HYBE during the next coming months. Now, valuation, I cannot disclose anything in the independent valuation report at the moment, but what I can tell you is that if you look at the general valuation of other projects in the world, you will find that a project like HYBE, at the stage of development it is, would have a value probably of about 100 million at the moment. 30% of that goes to, about 15% goes to Afri-Can Marine, so $15 million. Now, we must have in mind that that must be discounted, because we're not talking about 43-101 resources now. And that's one of the key points we had with the, or key discussion we had with the exchange. It's a resource that have been drilled by Rio Tinto and confirmed by Teck. So even if it's not a 43-101 report by the standard, it's a quite strong historical resource. So I would say the value we will transfer to our shareholder remains to be about $10 million.
Thank you. William.
Is that clear enough, or do you want to have more about the evaluation?
No, that's no. I realize you can't really go too much into detail, but is a 43-101 planned at some point?
What Teck told us after the program that they're carrying now, that will finish at about mid-November. With the results of that, they will have enough to state that we have a 43-101 resource. Because there was enough job done by Rio Tinto, but when you want to pass it to 43-101, you have to redrill some areas, and that's what they're doing now.
Okay. Okay. Very good. Thank you.
Pleasure.
Thank you, Marcus, for the question. Now, this is Jesse Feinberg again. I want to give one last opportunity for anybody else to ask a question, and then we can wrap it up. If anyone else has a question, feel free to please just type your question or type in a question mark, and we'll make sure to get to you. So let's just, Pierre, what's all right with you? Let's just wait, another 30 seconds and see if there's any questions, and with that, we can conclude. And like I said again, please, if anyone would like to continue the conversation, please shoot me an email or a phone call, and we'd be happy to do so. So I'm not seeing any other questions. I don't know, Pierre, if you want to have the last word and say sign off, but thank you all for joining. Thank you, Pierre.
I was pleased to do that. I would just remind people that in our view, Afri-Can is a unique opportunity for many reasons. The first one is diamond is a very good business to be in for the next coming years. If you look at articles that are talking about diamonds in the industry, you can see that it has a very positive outlook. Also, Afri-Can is unique because we don't have any capex to go in production, and we're at a very good period of time now because we're well funded. By Christmas, we will have completed. By the end of the year, we will have completed a sampling program that will start delineating resource to go in trial mining, and hopefully also we will have proceed with the share dividend in Hyde that will create another very strong project for our shareholders. So I think that, even if the markets were not very good, we're one of the very good prospects to look at in the market at the moment. So I thank everybody to attend to that presentation today, and if you have any question, you can contact Jesse or myself.
Great, thank you everybody for attending. I will follow up with you, and thank you, Pierre. So I guess this will conclude this eRoadshow. Thank you all for your time.
Thanks. Have a nice day.
Okay, thank you all. Goodbye.